Hello students. Students, before we venture out on the topic on the non-resident taxation, which will be our first topic primarily now, I just want to do the last two areas with all of you so that we are all then game for our non-resident taxation topic. So here it is about, students, if you see in this context, so if you see over here, students, in this particular context, what exactly all you get it over here, students, that we have discussed in the last particular lecture, which was about what, students? What exactly it was? Indeed, we have said about the fact that there has to be an income. Income means the revenue receipt and the specified capital receipt. That income should also fall within the scope of section 5. And only what is the income which falls within the scope of section 5, that will be taken further for the purpose of the computation in the manner laid down under the Act. That is what will be taken further for the purpose of computation in the manner laid down under the Act. Now, students, if you see this particular position which we have discussed in this regard, family. So, what I'm trying to tell you is that in this particular context, not all the income, students, will be taken for the purpose of computation under the Act. It is only the income which falls within the scope of section 5 will be taken further for the purpose of computation, which is what you all know, what you do in the computation in this context. So students, if you can recall in this regard, you get a computation question. You have done it in CA Inter as well as in CA Final. You will be getting a computational question. And when you get this computational question, students, of the total income and the tax liability in this regard, be careful. So students, over here if you see A, B and C in this context, so over here when you make the computation of total income, actually now you know which stage that you are in. Which stage that you are in? You are already in the C category. And then you do remember, then you write say of the person name, then previous year, say 2025-26, AY 26-27. Okay, now how do you present your answers? You'll put it like this, that particulars, amount, and then amount. That's exactly how you put it in your answer, student, isn't it? And then the heads of income is what you start with: salary, house, property, PGBP, capital gains, IFOS, thereafter the GTI, chapter 6, the total income. This is exactly what you do. Now over here, students, I tell you, you are in this point number C now. Please appreciate this particular point. And I told you already that in point number C, what is the income that is going to be computed? First and foremost is that there has to be an income. Income means a revenue receipt and the specified capital receipt. And that income should fall within the scope of section 5. That income should fall within what? Within the scope of section 5, and which is computed in the manner laid down under the Act. And which is computed, students, in the manner laid down under the Act. So all these variables has to be there for the purpose of the computation, students. Only then you will proceed further in this regard. I hope that all of you are clear with this one. Every one of you. That exactly is the point, students. That exactly is the point, students, in this context. So students, over here, if you see very, very carefully, in this context, what I'm just going to put you across one important question before I proceed further in this discussion. Students, over here, if you see very carefully, that I will henceforth refer this to be what? A and B together give me what? A and B. Now you can write A plus B is the qualified income. QI is what I'm writing. A plus B is what, students? Is your qualified income, QI. And this qualified income is what you are supposed to take further for the purpose of the computation. And how you do the computation, the format is already known to you. The format is already known to you, students. So A plus B is your qualified income. This qualified income is what, students, you will take it further. And that further is nothing but, students, in this context, the computation of total income as per the manner which is laid down under the Act. The computation of total income as per the manner which is laid down under the Act, students. I hope that all of you are clear with this one. Now, I'll give you some very important, I think that I have already discussed this point with all of you, but it's worth to recollect. If not, then please pay attention. Students, tell me one thing. Supposing in a particular case, generally in CA final, students, one of the question would also be relating to the computation of total income for a foreign company or a non-resident. That would be for around 8 marks or so. Now, if I tell you, and this was also targeted in May 23 or November 23, one of the attempt. If I ask you, and this question is there in your module, which is something which is now would be there, which you are going to solve also, but I'm just preparing you, just developing your mindset. Supposingly, students, there is a non-resident or a foreign company. Now, that non-resident or a foreign company has earned an income. That non-resident or a foreign company has earned an income outside India and also has received the income outside India. Earned the income outside India as well as received the income outside India. Both. Now you tell me, students, how we are going to go about it in this regard. Please tell me how we are going to go about it, students, in this regard. Quickly. My question to all of you, therefore, is, am I going to say like this that the foreign income, say 1 lakh, less not taxable, and therefore outer column I'm going to take it as nil? Is this the correct presentation? People have shown it in the examination and in the final CA. This is what exactly gets tested. So please tell me now in this regard, this will be the presentation? Answer is no. First thing first, I already told you, you will take in this particular statement of computation only that income which falls within the scope of section 5. Only that income. Which income? Revenue receipt plus specified capital receipt. And which falls within the scope of section 5. Only that qualified income will be taken further for the purpose of computation. Only that qualified income will be taken further for the purpose of computation, students. And that exactly is the point. So therefore, you have to be extremely careful in this regard as to that in the statement, first thing, computation will be of the qualified income. If the income is not a qualified income, then you will not take it in the computation. Then you will say, sir, but you have to comment something about that statement, that particular, in that question. You have to say something about it for that particulars in the question. Yes, you have to say it, but where you are going to say it? Where you are going to say it, students? You are going to say that indeed, You all are going to say, students, this particular part in what? Exactly, students. You are going to say this particular part in the notes, that there is a foreign income earned by a non-resident outside India, received outside India. The fact that it falls outside the scope of Section 5, therefore not chargeable under the Act. And since it is not chargeable under the Act, hence it is not taken for the purpose of computation. Hence it is not taken for the purpose of computation. I hope that all of you are clear with this one. Everyone! That exactly is the point, students. So this is how the things has to be looked upon. So with that, students, primarily, this is one thing, that the first thing that you have to deal with it. Now, how do you do the computation, students? In the manner laid down under the Act. Let's have a quick overview of the same. Students, how do you do the computation in this regard? Now, what is the first step in the computation, students? This is one of the most important things. What is the first step in the computation, students? Can you tell me in this regard? Students, please be careful. In this context, the first step I'm talking about it. In this regard, students, please understand your accounting income. Now, students, in the last lecture, I have told you the divorce between the income tax law and the indirect tax law. Like how in the income tax law, we have a residential status as a concept to determine the scope of chargeability. In the income tax law, we have the residential status concept for the purpose of deciding the scope of chargeability. And what about the IDT law? We don't have a residential status family for deciding the scope of chargeability. That depends upon the scope of chargeability. So far as IDT is concerned, depends upon the destination where the consumption has taken place. So that is the division between the direct tax law and the IDT law. So they are going in this direction. But definitely one common feature between what? Between the direct tax law and the IDT law was what? The common feature for both the laws was that both demanded some sort of territorial nexus. So unless and until there is a territorial nexus that exists, the chargeability cannot be attracted. The territorial nexus, so far as the income tax law is concerned, depends upon the residential status. The territorial nexus, as far as the IDT law is concerned, depends upon where the consumption has taken place. That exactly is the point. Now, when it comes to the computation part, in the computation part, students, if you see the accounting computation versus the computation that you do, so far as income tax law is concerned, the accounting computation and the computation that you do, so far as the income tax law is concerned, what is the difference between the two? For accounting computation and the computation that you do under the income tax law, what is the difference? This is well known to all of you students. As far as the accounting computation is concerned, you do the consolidated approach method, your profit and loss account. Do you prepare your P&L as per the books of accounts or for accounting purpose in separate heads of income? The P&L, is it prepared in the form of something of separate heads of income? Do you prepare that way? No. As far as the books of accounts is concerned or the accounting income is concerned, they are not segregated headwise. They are not classified headwise. That is how the accounting income is prepared. But when it comes to the income tax law, in that case, the computation of the total income is undertaken in 5 distinct heads of income. In 5 distinct heads of income. And this is a 5 distinct heads of income. In fact, I must say, students, the person who would have made the heads of income primarily, the lawmaker who would have written the 5 heads of income, before making the law, he would have seen his 5 fingers like this. And then he would have said the first finger is a little finger, small finger. And the small finger goes to which head? Salary. The smallest head is a salary head. Smallest both in the terms of the revenue that it generates to the government as well as the number of sections that it contains. It is only from 15 to 17. That is the only limited section so far as salary is concerned. Family. The next head, students, is house property. See the second finger, it's bit bigger as compared to the index finger. So in this context, students, if you see over here, second head of income, which is house property, what happens? Now here, see the problem of salary. Although salary in house property is not a part of your CA final syllabus, but still worth to just discuss something about it. One part, students, so far as salary is concerned, is that why this is a very, you get a flat standard deduction. The problem is that a person who is earning, say for example, 6 lakhs rupees, 7 lakhs rupees, the standard deduction is flat. A person who earns, say, 3 crores of salary income, even for that person, they get the same standard deduction. So there is no progression that if your income is higher, if your salary income is higher, your standard deduction is higher. Nothing of that sort happens. A person who earns a salary of 8 lakhs versus a person who is earning a salary of 3 crores, they are getting the same standard deduction. And there are hardly only 3 deductions which are there. And these 3 deductions are rubbish, I must say that. One is a standard deduction, rubbish. The amount is nominal. Second is a P-tax deduction, professional tax deduction. And the third is the entertainment allowance. And that too only to the government employees. Although this is nothing to do with your syllabus, but still recollecting your inter-CA memory. Good olden days. Only 3 deductions, which are nonsense. So that is the reason why the total depth of the chapter of salary has only 2 or 3 sections. That is it. No deduction family is given to them. And I'll tell you one thing, students. There are 2 ways. Please understand how the psyche of the government. See, you don't have to learn income tax. You have to become a policy maker, students. My students are there in the policy making. I've told you about it earlier also. So in this context, students, you should think of it. See, do you know what the government do? There are 2 ways of looking at it. Either the government try to disturb the head itself, that is salary itself, and they enlarge the standard deduction. That is one, enlarge the standard deduction, enhance the limit of exemption like children education allowance, which is 100 rupees, something of that sort. I don't not remember also. People say it is not worth remembering. In just a minute. I already told you that, students, isn't it? So there are 2 ways of it, like children education allowance. All are what? 100 rupees per month per child. That is a kind of exemption that you all get. And that too maximum 2 children. That is fine. But 100 rupees. In 2025, you people are earning 100 rupees. In fact, when I was doing my inter-CA for the first time, those in late 90s, I also did 100 rupees. In those time also I was feeling, sir, 100 rupees is what? Exemption for education. That time also 100 rupees was nothing. Then because of the such silly exemption limits, 50 rupees for some lunch allowance, so felt very bad that the limit is very less. Then what I did, I asked my principal who did his CA in early 80s or late 70s. I asked him, sir, what was the limit in your time? He also said the same thing, 100 rupees. Then I came to know 100 rupees is the limit in 1961 Act itself. And the limit has not changed. We are in 2025. So ridiculous the things are. Standard deduction, you already know. I already gave you that pinch. But the government thinks in this way that look, sitting in Mumbai, sitting in Ahmedabad, sitting in Vadodara, sitting in Delhi, sitting in Chennai, Bangalore, Hyderabad, or all the other cities, we may ridicule this limit of 50,000 standard deduction, 75,000 standard deduction. It is nothing, isn't it? But just think of some people who are staying in that tier 2 and tier 3 cities, or the government employees, primarily, who are earning primarily around the range itself of a good deputy commissioners or this kind of a profile. Their salary ranges around 8 to 9 lakhs. What they finally get is perks. So for them, the standard deduction matters a lot. And there are many people in even the private sector, they don't earn much, even in their salary. Primarily, they stay in the remote area. For them also, this standard deduction is much. But when we are sitting in the cities and all and earning a good amount of salary, we may feel that particular amount is this. So this is the plight of India. There are two India which exist. And that is the reason why I say to you, say to many students, that many students, CA students say, when they say, sir, what is our life? Our life is very boring, primarily, in this case. Getting up in the morning, then going to this, watching our boss every day, and then same client, old client face, very irritating. He abuses us, we reciprocate the abuse. That is what is our life. Life is something which is not worth it. Then I must say to all of you students, at least you reached to CA final level. Congratulations to all of you. You studied so much far, isn't it? You say, sir, what is the big thing? Our friends are also studying. We are also doing it. What's the big deal? It's a big deal because there are still 60% of India who, what you are getting presently right now, at this point of time in your life, 60% of India will have to cross 2 or 3 generations. 2 or 3 generations has to cross. Only then their second or third generation will get the life which you are getting it right now. Will get what? Will get the life which you are getting it right now. This is the other part of India. So one India is what probably we are experiencing. All our CFR students are across it. I am taking the lecture. I am also blessed. You are also blessed because our generations earlier has toiled that much so as to give us what we have got in our present scenario. So our present is because of those 2 or 3 generation sacrifices, primarily. And the other 60%, as I told you, 2 or 3 generation has to pass by. And then what we are experiencing today, their second or third generation from now will experience what we are experiencing today. And therefore, we should consider ourselves blessed, isn't it? Therefore, the routine which we are in is something not normal. It is a privilege to 60% of the population of the country. And that's the reason why the government is thinking that 60%. And hence, it is not in a position to disturb the salary part. They're not in a position to disturb the structure of salary, right from 1961 to 2025. So what they got, but at the same time, middle class, India now, the growing middle class, becoming upper middle class becoming rich, rich becomes super rich. That is the trajectory that India has taken. With the growth, we are getting into the third largest economy in the globe now. And that is a scenario. Our poor, middle class, from middle class, upper middle class, too rich to the super rich category. These are escalating. People are escalating to the next level now. So what happens to them? Once they escalate, they find that they don't have anything from the government. Minor deductions are there. And that's the reason why, students, the government, what it has done, the government is not changing the head. The head is remaining the same. The structure of the head is remaining the same. So what the changes now we are witnessing? What is the changes that we are witnessing, students? Please tell me. Indeed, we are witnessing the change in the tax rate structure. The tax rate structure. In fact, your attempt is a historical attempt. Because now you know from the news that you would have seen, and in my next class, you would know what is the slab rates now. The increased slab rates are there for an individual category. Although for the companies and all, not much of the change, but for the individual, you also are aware, and we will also do in the next class. What is the increase in the slab rate? This is what is the government response to all the growing middle class, upper middle class segment who feel completely stuck that they don't get much deductions. Nothing is changing so far as the heads of income is concerned. So to ensure, to take care of their concern, their need, India is no longer the other India which was there in those pre-liberalization era. India is growing faster, and the fast that we are growing, we are heading towards the third largest economy of the world. And if that is the pace at which we are growing further, the government have to react. Otherwise, that government will perish. And we all know how they have done it. Just before the Delhi election announcement got there, they made this announcement. All of you are aware of that. Of the increase in the slab rates. And that is what we are going to see in the next class. So students, this is what is the scenario. The 5 heads of income which we have got right now. More or less, we will find that the things are more or less are the same. Obviously, there are changes that has taken place. Like one change is also on the capital gains front. Very important change. The indexation part that you people have learned in your inter CA no longer exists now in final CA. At least for your attempt, I will not speak about the indexation at all. One case still the indexation exists. But other than that, one case, no other indexation are available now. This is the other worth noting amendment, what you learned in inter CA, and now what you're going to learn in final CA. But rest of that, 5 heads of income remain the same. Of which you need to do only 3. PGBP. The third head of income. Now, just continue before coming to this, the segment part of it. Let's again coming back to our original discussion. The second head of income, students, if you see house property, you need to be thinker, students. You need to think on the subject. You need to really get enriched from the discussion, from the learning. You need to evolve in taxation. Take it to the next level. Take it to the second particular part, students. House property. Now, if you compare house property with salary, I must say that the house property as the head of income is much progressive. And why I say so progressive so far as house property is concerned? The reason is very clear, students. If you see the house property, we have got a standard deduction, which is the way we have got standard deduction under the salary. Same also is the case with the house property. You get a standard deduction. And the standard deduction that you get over there, what is it? 30% of the net annual value, NAV. 30% of the net annual value. Isn't it? You all are aware. 30% of the net annual value. And this is the best thing. Compare now salary and house property. In salary, you get stuck. The standard deduction is fixed. salary increases, standard deduction will remain the same. But what about house property? Your annual value increases, and correspondingly what? The standard deduction also increases. Your annual value increases and correspondingly your indeed the standard deduction will also increase 30% of NAV. So this is much progressive. But be careful, students. Be careful that under the head salary and under the head house property, you don't get the actual deductions. You all agree to this one? Under the head salary and under the head house property, students, you don't get actual deductions. That exactly the point. Yes, there are only two actual deductions apart from standard deduction. Because you are getting a standard deduction, you don't get actual deductions. So irrespective of your actual expenditure, it can be lower, it can be higher, doesn't matter. The standard deduction remains fixed. It may so happen that you may not have incurred any expenditure at all. Whether still you will get standard deduction? And the answer is yes, you will get it. Yes, you will get it. That exactly is the point. I hope that all of you are clear with this one. Every one of you. This is how the things has to be looked upon. So students, in this regard, the standard deduction which has been there, you always be very careful on this particular side that these standard deductions, students, family, are irrespective of the actual expenditure. You'll say, but sir, in house property and just now in salary, you told that there are entertainment allowance deduction, there is a P-tax deduction. Yes, there are only two extra deductions, which is on actual basis. Entertainment allowance for salary and P-tax for salary. And if it is a house property head, then standard deduction, apart from standard deduction, there are two actual expenditure deductions which are given to you, which is that municipal tax paid for house property after reducing the municipal tax. Students, please recall how you calculate your house property income. Did you recall that point? How you calculate your house property income? You have got GAV, gross annual value. From gross annual value, you will reduce the municipal tax paid. Then you get your NAV. From NAV, you will deduct thus 30% standard deduction. And after reducing that 30% standard deduction, that you get that you will deduct. Last one deduction is there, which is interest on borrowed capital for purchase or construction of house property. Interest on borrowed capital for purchase or construction of house property is your final deduction. So apart from standard deduction, you get two deduction on actual basis. Apart from those two deduction, any other expenditure will not be allowed. That is very much covered in the standard deduction itself. Apart from those two actual expenditure, you will not be getting any further deduction. Those are very much covered, students, in the standard deduction itself. I hope that every one of you are clear with this one. All of you. That exactly is the point. That exactly the point. Fine. So these are Mukta. So this is the two things. Now the third one is the biggest one. Can you see that? Which is the biggest one? PGBP. And I'm knowing the fact because you hated PGBP a lot that you felt the DT is tough, isn't it? Because you have not understood it in correct perspective. The third one that happens to be PGP. In the finger, if you see this is the biggest finger and this is the biggest head also. Why it is the biggest head? Reason being, think logically. Why it is the biggest head? Logically, the answer is very clear to us because there is no standard deduction under the PGBP. There is no standard deduction under the PGBP. That exactly is the point. The deduction in PGBP, students, you get it on actual basis. The deduction in PGBP, students, you are getting on actual basis. Is that point clear to all of you? Actual basis is what you get the deduction under the head PGBP. I hope that all of you are clear with this one. Every one of you. So that is the point, students, over here. In this context. That's the reason why this becomes the biggest head of the entire lot. The next head is capital gains. Although I will not say this is the biggest head, but in terms of the value proposition, it is indeed a very significant head. Which head I am talking about it? Capital gains. So capital gains, students, I will not say as a biggest head of income. Capital gains, I will not say this as a biggest head of income, students. But in terms of the value proposition, it is indeed a significant head, and yes, it is one of the biggest head. Because obviously, a person who is earning say 10,000 rupees per month, but he has got an ancestral property, and that ancestral property is what he has sold for 10 crores. Just imagine, throughout his life, he will not earn the amount, but from that one property transfer, he is earning that much of the amount. That much of the amount, student. And that exactly is the point, student. So therefore, this is a significant head in terms of the value. And the last head, students, in this context is what? Is this salary. It is IFOs. The last head, students, is the IFOs. Now, over here, students, there are 5 heads of income, students. You all appreciated this. Now, most important, before you do, now, obviously, you have to compute only 3 heads in your final CA. First 2 is not there in that case. So only 3 heads of income is where you need to lay your focus on. But still you should know something basic of it, very basic. So in our discussion, students, I'll keep on touching upon salary and house property from time to time. I'll be touching upon to them so that you at least are in touch with those basics part. Although, obviously, since it is out of the syllabus, they will not be targeting any question. But nevertheless, see, DT cannot be completed unless we discuss something like the way now you can appreciate PGBP biggest head because everything is on actual basis. But to appreciate PGBP being a biggest head, you need to know what is happening in house property and salary. Standard deduction is the answer why these 2 heads of income are a smallest head. Because you don't get any deduction. You don't get any deduction on actual basis. That's the reason why this is the smallest head of the lot. I hope that all of you are clear with this one. Now, coming to this particular part, students, the 5 heads of income. Now, please understand, as just now you would have felt, students, just now you would have felt right now, each heads of income has a unique mode of computation in that head. Just now I told you, salary, you have got 3 deduction. One is a standard deduction, which is a flat, tea tax, entertainment allowance, house property, municipal tax is the actual deduction. After that, NAV. From NAV, you get standard deduction of 30%. And then there is one more actual deduction of interest on borrowed capital. And then the PGBP is on actual basis. All the deductions are available, subject to the conditions. So what I'm trying to tell you is that each heads of income has a unique way of computing the income in that head. Unique way. There is a unique mode of computing the income in that particular head. Distinct mode. So if it is a unique and distinct mode of computation in that particular head, students, please tell me then. If there is a unique and distinct mode of computation of income in that particular head, students, please tell me quickly. what is the first step of computation? You know then what is the first step of computation? That whatever income that you have earned, which is a qualified income, which you now want to do the computation, which you now need to do the computation, you need to choose your head appropriately, which means you need to classify your qualified income into the correct head. The classification of the qualified income in the correct head is the first step of computation. And if there is a wrong classification, of the qualified income, like for example, an income which is in the nature of, say, salary, and that income you are taking in the head, say, IFOS, obviously you will come out with the wrong answer. An income which is under the head house property, but you are wrongly classifying that income under the head PGBP, you will come out in a wrong way. Your income will be a wrong amount that is going to come out. Do you all agree? And why a wrong amount is going to come out? Obviously, a wrong amount will come out in this case for the only reason that, students, that by classifying under the head PGBP, you have taken the actual deductions, whereas you were only entitled for standard deduction. Your correct head has to be what? House property. So what I have told you is that the first and the foremost step of computation, is what? Classification of the qualified income in the appropriate heads of income. A wrong classification will result into a wrong computation in that head, and if it is a wrong computation in that head, it will result into finally a wrong total income, and if it is a wrong total income, eventually it will lead to a wrong tax liability. Can you see the ripple effect? You'll say, sir, but we won't make any mistake. We will see. I'll ask you. Let the time come. At that point of time, I'll ask you those questions. And at that stage, you will start wondering whether this income, will it be classified in this head or it will go into that head. That is where you will now know how a person can see the stars in the morning, isn't it? So I'll make you see the stars in the morning, student, by asking those questions. Right now, I'll ask you the inter-CA level question, which you have enjoyed a lot, isn't it? What kind of inter-CA question that you have enjoyed? So the inter-CA question that you all have enjoyed was, what was that question? Quickly. A lecturer, he is employed with the college, and monthly he is getting remuneration from college. At the same time, he is also university paper checker. So from the university also he is getting some amount. So he is getting one amount from the college, he is getting another amount from the university. So tell me, which is the appropriate head where the classification will be made? Which is the appropriate head where the classification will be made? What he earns from college will go under the head salary. What he earns from the university, that will go under the head IFOS. Didn't you learn this example in your inter-CA? And you were thrilled after answering the answer in this context. So what you essentially did by answering this question, you actually ended up doing the classification of his income into the appropriate head. That is the first step, because a wrong classification will come up with a wrong computation in the head, and which will result into a wrong total income, eventually leading to a wrong tax liability. So this is the basic thing, student, that you should always understand, that the first step of computation is classification in the appropriate. So there are rules of classification that we are going to learn in each heads of income to ensure that the income is classified properly in that head. We are going to learn the rules of classification in the heads of income. And once the rules of classification is settled and we have classified our income properly, then we will proceed further to do the actual computation of income in that head as per the manner laid down in that head itself. And then we will come out from that head, go to the next head, so on and so forth, then arrive at our GTI, after GTI, chapter 6A, and finally the total income. I hope that all of you are clear with this one, students. Every one of you. So please, students, take a note of it now, all of you, quickly. Point number C. Computation of income in the manner laid out under the Act. Computation of income in the manner laid down under the Act. Please write. This, not all the income are taken for the purpose of computation. Full stop. It is only the income in the bracket RR the specified CR which falls within the scope of section 5, that is taken further for the computation in the manner laid down under the Act. Next paragraph. Since each heads of income has a distinct mode of computation, comma, It is therefore important to classify the income appropriately in the relevant heads of income. Underline the word distinct mode. Wrong classification will therefore result in wrong computation of both the total income and the tax slab. Wrong classification will therefore result in wrong computation of both the total income and the tax slab. So that is one thing that you should always bear it in mind. Accordingly, each heads of income, each heads of income has rules of classification of income in that head, which is also popularly known as the charging section. Which is also popularly known as the charging section. So you know the charging section of every head of income. At least you would have heard of it, although you may have forgotten by now. But you would have heard something like there is a charging section in each heads of income, isn't it? So that is the point. Now the next particular part, students, if you see, so I just give you the section range of each head. So at least you are comfortable. So step by step, you will start getting comfortable with the section also. Step by step, you get comfortable with the section also. So I'm just giving you section range of each head. So starting with salary. Section 15 to 17. House property. Section 22 to 27. EGVP. 28 to 44 DA. Capital gains. 45. 55A, this 44DA. This is 56 to 59. Fine, student. So these are the section range that you will find it in the heads of income. Obviously, the first two head is out of the race. So what is left is 28 to 59. What is left for deliberation is 28 to 59. Now coming to the next one, students, after this, students, there is, after this, students, concept of clubbing of income. Which is 60 to 65. Clubbing of income. Yes, sir. So students, if you see this clubbing of income also, clubbing of income section 60 to 65. Now, if you see why this clubbing of income is introduced, can you tell me the logic why you have learned the clubbing of income? Any logic that you can share? Why as such you have learned the clubbing of income in this context? There has to be some logic, no? The clubbing of income. That you all have learned it. What is the genesis? And the reason for the same. Any clue on this one, students? So the reason is very clear, students, over here. The clubbing of income, students, in this particular context, you have learned for the reason is that there were, if you can recall, wasn't there an exemption limit available to the individuals? Basic exemption limit is there, no? For the individuals. Not only that, there is a differential tax rates also, depending upon the slab of income. There's a differential tax rate. So you may have come across, maybe in your articleship, some cases where the client is doing like this. So he is about to receive, say, 10 lakh rupees. He says that give 5 lakh rupees in the name of my wife, 5 lakh rupees in the name of my mother. He does not want to take that check in his name. Why? Because he is already on a higher bracket of income. So therefore, this artificial splitting of the income that has been done so as to avail the benefit of exemption limit or avail the benefit of the lower rate of tax was the reason why the clubbing provision was being introduced. Repeat with me. The artificial splitting up of the income. The artificial splitting up of the income to avail the benefit of the basic exemption limit and to avail the benefit of lower rate of tax was the reason why the students, why the this particular clubbing of income was being introduced. In fact, students, if you see in the IDT also, like registration, there is a limit for it, 20 lakhs and all. You all are aware. So there also, wherever there is a basic exemption limit, in IDT, GST also there is a basic exemption limit. Wherever there is a basic exemption limit, you will always find the clubbing provision. So in the GST as well, there is a clubbing provision. Although it is not named as clubbing provision, but just see, all the business-wise aggregation has to be done. What is this business-wise aggregations and all? Just to see that they don't split up the name or the business to achieve the 20 lakh limit which is there in the GST. So that's a clubbing provision. Here it is also, individual HUF is getting the benefit of basic income limit. Not only that, there is also lower rate of tax depending upon the slab that you are in. And that is the reason why people choose to artificially split their income so as to avail these benefits. And to address this tax avoidance measure, resorted by these individual and HUF, that the clubbing provision has been introduced. So the individual has tried to resort what? Repeat with me the phrase which I have used loudly in your home. Please shout. What is the measure which the individual is resorting? Individual is resorting a tax avoidance measure. The phrase, keep this in mind, students. Tax avoidance, an important chapter. General anti-avoidance rule. There you need to write tax avoidance. So this individual has undertaken measure. The individual has undertaken a measure to avoid his taxes. To address this, the clubbing of income has been introduced. Tell me one thing, students. Does partnership firm and does a partnership firm or does a company, do they also get basic income limit? Partnership firm or a company, do they also get the basic income limit? What is your take on that? A partnership firm or a company, do they get also the basic income limit? No. Do they have a differential rate of tax? Slab rate of tax? Again, the answer is no. So, can a partnership firm or a company can do this tax avoidance the way the individual or HUF can do? Can the partnership firm or company can do the tax avoidance the way individual and HUF can do? Answer is no. And that is the reason why, if you can recall some bit of clubbing of income chapter, there were no provision in the chapter of clubbing that was for partnership firm or company. There were no provision in that particular chapter which was there for partnership firm or company. So students, this is a point over here, clubbing of income. Just write briefly for this part. And so far as individual or HUF is concerned, they are eligible for the benefit of base income limit, B, tax rate on the basis of therefore these person can resort to tax avoidance measure by artificially splitting up the income. Full stop. In order to address such tax avoidance measure, that the clubbing provision has been introduced has been introduced. Fine, students. Students, after this, as you know, next is, students, two things. Set off. Please write in this context. Set off and carry forward and this range runs in section 70 to section 80. Two things are there, so just put it like this, presentation like this. Set off is one thing and carry forward and set off of losses is another thing. So first you do the set off in the year of loss. If loss is not fully adjusted, then what do? You do the carry forward, and in the subsequent year, after doing the carry forward, in the subsequent year, you do the set off. So there are two things, set off and carry forward and set off of losses. After this, you will get what? Yeah. And then students, after this less what? Chapter 6a, reduction. And finally, get your total income. This is exactly what you are deriving for the purpose of chargeability of section number 4. Isn't it? Total income is what is chargeable, isn't it? So this is a process that you have to arrive at. Don't total income section 4 is what is charged. What is the total income, students? This is exactly, and when, students, tell me when this computation will be done, as per which law, that this computation is done. Tell me the initial lectures. Can you recall that? Tell me the initial lecture, students, in this context. So the total income will be computed as per the law. Which law? As per the law which exists on the first day of the AY. First day of the relevant AY. So whatever is the law that exists as on the first day of the relevant AY, on the basis of that law, that the computation shall be made. On the basis of that law, students, that the computation shall be made. And that is how you arrive at your total income. And once you arrive at total income, what is the next thing that you need to consider? The rate of tax. After the total income, what is the next thing that you need to consider? Is nothing but the rate of tax. Multiply the rate of tax on the total income, you get the tax liability. You get the tax liability. So I hope that all of you are clear with this one. Every one of you. So this is what it is.